So 2021 has been a unique year for everyone. We've got major tax legislation coming. We've had market highs in a lot of areas in the stock market. Real estate is tending to be up. We've got the concern of inflation. We've got major tax legislation looming, and we've dealt with a lot of clients that have a lot of fear of the unknown. And one of the things that I've found is that fear can quickly creep in and leave us paralyzed and feeling like we can't do anything to control our lives or to make wise decisions with our finances. And that's just not true. What I found is that one of my former coaches used to say, control the controllables. Control the things you can control, and the things that you can't, stop worrying about. And so as financial advisors, we want to help our clients to do what they can do, to control what they can control based on what we do know. We don't know what tax legislation is going to come through or how it's going to affect you right now. We do know what tax law is right now, and so let's make some wise choices based on what we do know. So don't give anxiety authority in your life. Instead, do what you can with what you do know right now. So here are some things we do know. And a disclaimer to start here, you're always going to want to talk to your tax accountant or your CPA before you make any large decisions. And so that being said, here are 3 proactive ways that you can go about doing something with what we do know now that's going to have an impact on not only your financial future, but also many others' financial future. So the first is consider making a qualified charitable distribution. A QCD, or a qualified charitable distribution, is just anyone who's 70 and a half and has an IRA of any kind can give up to $100,000 in 2021 directly to a charity. So there are many advantages to this. Most of us, if you're 70 and a half, you have to take an RMD, or a required minimum distribution, from your IRA. That is going to cost you on the tax side. You have to take that as taxable income. The alternative to that is doing a QCD, giving it directly to a charity so that you never actually take on those dollars and pay taxes on them. You give them directly to the charity, and the charity does not have to pay taxes on those dollars. And so there are a number of benefits for you. The first is a qualified charitable distribution counts towards your RMD requirements for that year. The second is it's going to reduce the amount of RMD you'll need to take out for the following years, because it reduces the account value. The third is it's going to help your favorite nonprofit, and who doesn't want to do that at this time of year? It's a huge time to do a lot of giving. So this is a great time of year to give a bigger gift, and you can do that using some taxable dollars. And the fourth is it's a much more efficient way to give than just writing a check out of your checkbook. Give some dollars that would have cost you taxes directly to a charity, and you're actually going to give a higher dollar amount, which is going to help that charity in the end. So consider gifting appreciated assets as well. If you have stocks, if you have land, if you have real estate, most of these things have appreciated in 2021. So a lot of people have highly appreciated positions in their portfolios. What you could do, instead of taking on that appreciation, selling those stocks and then giving those gifts, you can just give that stock or that land or that real estate directly to a charity. And in a sense, you're passing that capital gain on to a charity. The benefit of a charity is they don't pay capital gains taxes. So when they sell that asset, they don't have to pay taxes on the growth. And so you're maximizing your giving by giving appreciated assets. Some people would consider giving their stocks. If you want to do that, that's going to have a great impact on your tax deductibility for this year, because if you give an appreciated stock, you get a deduction on that gift for the year. Generally speaking, it's going to be up to 30% of your adjusted gross income. Not all nonprofits, though, are prepared to receive the gifts of an individual stock, or of land, or of real estate of any kind. And so you want to check with your nonprofit, your favorite nonprofit, get in touch with them now to make sure they have time to set up an account that can actually receive that. There are a number of smaller local nonprofits that are not equipped to be able to receive those assets. So you want to make sure that they have time to do that so you can give that gift to them by the end of the year. If you want a large tax deduction for 2021, but you don't want to give the money directly to the nonprofit yet, you can give to what's called a donor advised fund. A donor advised fund just allows you to invest into an account that is a nonprofit You can invest those dollars into the stock market and let them sit and grow, and you can decide at a later date to give out of that donor advised fund. A lot of wealthy clients will use donor advised funds as a very cost-effective way to create a family foundation. So they can put $50,000 or $100,000 into a donor advised fund and leave it sit there, and then have their kids or grandkids make decisions on how to distribute those assets on a yearly basis. I've heard of families that use donor advised funds for their Christmas get-togethers, and all of the grandkids come and bring their favorite charities that they want to give their $500 or their $1,000 to this year, and they present a plan to say, hey, this is why I want to give money to this charity. And it makes it a cool family event. So be creative in how you use charitable giving and how you use some of these tools. They can be used in really creative ways. Do you want lifetime income and a tax deduction for 2021? One of my favorite tools to use in charitable giving is called the Charitable Remainder Trust. A Charitable Remainder Trust is a charity that you're giving money into the trust. The trust is going to be given in whole to a charity at your death, but you're going to receive income from the trust until the day that you die. You can set this up for you and your spouse so that it's the last to die, but it creates basically a tax efficient source of income for you now. It gives you a tax deduction now. It's going to be a pretty large tax deduction for right now, and will allow you to do some things like Roth conversions from some of your IRA accounts or 401k accounts. But a charitable remainder trust also is going to leave a large amount of money to a charity. Some people combine the charitable remainder trust with a donor advised fund and have a donor advised fund become the beneficiary of the charitable remainder trust, so that your kids can be in control of where those dollars are given on a regular basis afterwards. So there's some really unique strategies that you can use with different positions that you may have in assets. The final thing to consider would be a charitable lead trust. It's kind of the opposite of a charitable remainder trust, where a charitable lead trust gives the income from the asset directly to the charity for a certain number of years, and that's all calculated out so that at the end of that term, 10, 15, 20 years, the asset passes on to the next generation tax-free. So it's a way to get land or business assets to the next generation without paying taxes on those assets. And it benefits the charity now, which helps with their bottom line right now. It also gets you an upfront tax deduction in 2021. So there's some really unique things to consider there, but one of the things that's most exciting about our current environment right now is that we have an environment where we have a lot of highly appreciated assets, but we have that in combination with really low interest rates. And the reason that's important for charitable trusts in particular is that charitable trust deductibility is all determined based on interest rates. So the lower the interest rate, the higher the deduction you get. So the highly appreciated asset that you give combined with low interest rates means you're going to get the maximal deduction that you could possibly give for your giving. So it's a great year in 2021 to take advantage of using charitable trusts, whether it's a remainder trust or a lead trust. And the final thing I would ask you to consider would be harvesting losses. And this is this is something that most stockbrokers will do for their clients, but it's something we try to do on a yearly basis. There aren't a lot of losses this year, but in certain cases there are bonds or specific stocks that people have invested in that may have gone down in value. It's a good idea to look into selling those if they're a long-term a long-term stock or long-term position, selling those, taking on the loss, and then giving from that cash that you've created directly to the charity. So it's a way to get yourself a tax deduction and give to your favorite charity. So there are some things that we can do no matter what's happening in the stock market, no matter what's happening in the government or in the world, to take control of our finances, to be extravagant givers, to be efficient givers, and to take control of the things that we can control. So I wanted to finish with a quote. I once heard a wise person say, "I don't know what the future holds, but I do know who holds the future." And no matter what happens in our lives or in this world, we can choose to be proactive and to take control of the things that we can, and then to trust in the one who's in control of everything else. So I would encourage you to, as you approach giving this year, to think outside of the box. Remember that there are things that we can control. Choose to control those things. Don't worry about the things that you can't control. Turn off the news and come in and talk to us, and let's create a plan.